Welcome everybody to the June 2023 market update. I'm Cindy Bishop with Cindy Bishop Worldwide, and the topic for today is our monthly market update. This update is super important, especially if you actually want to know what's going on in the real estate business so that you can navigate through it. I think the market update is very important because I think it anchors you as a real estate agent and what mortgage updates are going on, interest rates, what's the climate in the community, et cetera. Now, our speaker, Jolene Moore, is a top producing lender. Her knowledge of market intricacies as well as her attention to detail cause her to be literally one of the best mortgage finance authorities in your market today. Jolene has an abundance of experience and a keen ability in the real estate lending field. She is not only a top producing lender nationwide, she is also a vice president and senior home loan consultant with Cross Country Mortgage. She is also well respected and a sought after trainer with Cindy Bishop Worldwide. I'm trying to get her to do another divorce class. That's one of my favorites. I think that is super duper good. I also like business building classes very much. Over the next couple months, I'm hoping that she'll be able to get those scheduled. So, just you can always email me or just, look for them on the site. And as always, thank you, Jolene, for teaching. And please welcome Jolene Moore, your presenter today.
Thank you, Cindy. Thanks, everyone. Thanks for being here. I appreciate it. I actually, we were just saying that this, I think, is the lowest sign up we'd had, but I was putting this together and I was like, wow, I think it's a lot of good information. So hopefully people find it online as well. And then we'll post it also to let everyone get the info. And if you have any questions, unmute yourself. I love interaction, or put it in the chat. So I want to, create as much interaction as we can and, answer any questions that you all have as well. Okay, so interest rates, always start out that way just to kind of give you an update. Rates right now, if you look like from a year ago to now, we're probably up about 1.4, 1.3, somewhere in that range, depending on the product, higher than we were at this point last year. So obviously we're seeing that and feeling that based on the clients and their concerns of interest rates. But as we all know, the rates are expected to improve. I think it's a slower process than some were expecting. There were many experts in our industry that thought in May we'd start to see, with inflation numbers that came out, we'd start to see the rates starting to improve, as May 10th was the date. Well, May 10th came and went. And unfortunately, what happened that kind of offset the inflation numbers coming down some is the job reports continued to come out pretty strong, the amount of jobs that were created, even though there are other reports that were indicating that might not be truly the case. But then also the banking industry, you guys saw that there was probably 3 banks at least that were taken control of, and then other banks were having to sell off mortgage-backed securities and bonds to be able to create their liquid cash that they needed. And then also the debt ceiling, that all of that went on. We obviously have a resolution to that, but those combinations of all of that had an impact to where the improving inflation numbers, usually interest rates follow inflation. Inflation has been improving. So usually you would see our long-term interest rates start to come down as well. Unfortunately, because of some of those other things that are happening in our economy, we haven't seen that start to happen as much, and we've actually moved up since then. So we're going to see, over the next few months, what starts to happen. The Feds are meeting next week. There is, the job numbers that came out last week on Friday were stronger than expected. So prior to that report, there was a strong expectation that they were going to pause the rates. Chairman Powell did say that, they're going to take a pause potentially, meaning that actually the word wasn't pause, there's another word, but basically it was like they were going to take they were going to not potentially raise on this next meeting, see what other economic reports came out after that to see if they should continue to hike or if maybe they should be done for a while and not continue to raise their rate. With the job reports coming out last week and being stronger than what was expected, it's going to be interesting what happens next week and whether or not they do hold, basically, and they just hold that and don't do any, rate increases or decreases, or if we see a 0.25% increase next week. So the CPI numbers, which is a strong inflation indicator, is coming out the day, during their time period of meeting. So whether or not, how that looks and if that will have an impact on their decision, we will see. It is expected next week when those inflation numbers come out that we're going to see them improve slightly. So again, we'll see what happens, based on all of that, that's going to be coming about over the next few weeks or so. Now, rates fluctuate every day. You guys know, I'm going to show you, this is a chart that I look at, and this is it's called MBS Highway. This is a leading industry leader for us, and kind of give us an idea of what's happening in the market. And you can see right here where it says negative, arrow down 56 basis points. That means our market is worse by 56 basis points. That's a significant amount of difference for us, which means that's going to increase our interest rates, increase the pricing of interest rates, and we may see interest rates increase an 1/8 of a percent. It could be where, like, if the pricing of one rate is just on the edge, it might bump us up, it might leave us where we are. It all depends on the total loan scenario of whether or not what the impact will have per client. But the reality is this is what we're seeing today, right? If you can look down here, and these candles, this is what this is called, is a candle chart that's giving you, you can go back to, throughout you can see the dates here at the bottom of when it's green, that means that the bond market opened at one point and it closed at a higher point, which means it's better for us. It means our rates would be improving if that's to happen in the green. When we start to see red, that's when we're moving, the bond market's moving down, which means our rates are moving up. So you can see over May 26th, May 24th, all that time period, we were seeing red and we were seeing interest rates increase. We've kind of hit a bottom there, and we've now started to see a bounce back where our rates have started to improve a little bit. We saw earlier this week on Monday, the rates are actually Friday, when the job reports came out, again, we started to worsen a little bit, and we're seeing it today. So that's the unfortunate thing in our current market, is it is so hard to tell a client from day to day that that the rate is going to be what it is today versus what it is tomorrow. So when I talk to clients, and I would strongly recommend this to you as well, is when you talk to a lender, and if they're talking to more than one lender, you really need to be talking to them on the same day around the same time, because the rates are moving so much and the rate and the market is shifting. We could potentially be changing one way or the other, right? We might see improvement, we might see it worsening. So it's really a challenging time in the sense of just helping everyone understand what's going on and where the markets stand. So one thing I will show you as well, this is called Mortgage News Daily. And this is a great site that you all could look at, because the other site is a membership that is required. But this site, you can go on here and it will give you an idea of what's happening with the market and where the interest rates are going. So you can see here where right now it says negative. MBS prices, which is mortgage-backed security pricing, which is what the bond market is impacting, are significantly weaker today. So you could see rates moving higher. So that gives you an indication of what is happening with interest rates in that particular day. What you can also do is click on that 30-year fixed, and you can go on here based on any particular day, and it gives you an idea of where the rate was as of that day. So again, if you're wondering where the market is, or if you have clients that you want to share this with as well, it can be a great thing for them to understand what's happening day to day with interest rates. If you guys have any questions on that, let me know, but I wanted to share that information with you. Okay, so some other economic information that came out today and this week is Evercore trucking survey. So it's the kind of what goods are being moved, all of that. That survey can be an accurate recession indicator when it drops below 48. And right now, the most recent reading is 36, which means we are entering into recession territory. So again, we'll keep an eye on all of this, but it's just something to think about. And we've been hearing the word recession for quite some time, but where are we going to go, and when are we going to, be in it, and how much is it going to impact us? Used car sales. So the two things that have been driving inflation was the housing, sector, meaning rent increases, things like that. We started to see that improve over the past few months. The other thing was used car sales. Was a major contributor to inflation last month that caused inflation to be a little bit higher than what was expected. It is showing right now, it's showing an indicator that the prices have slowed. So that increase in used car sales is actually moderating. And we actually saw that it's decreased of 7.6% from last year to this year. So again, those are indicators that the inflation numbers are going to come in lower, which is going to long-term start to help us improve our interest rates. CoreLogic said home prices nationwide were up 2% year over year, and still believes that it could rise 4.6% over the next year, home prices. Northern Virginia Realtor Association said that average sales price was up 3.7% April from this year to last year. Total sales were down 34% from the same time period. Now, I looked up two other local real estate associations, and one was Prince William and then one was Dulles. And it was interesting because in Prince William area, they said the median sales price was down 2.21%. And in Dulles area, which is Loudoun County primarily, was down 3%. So you can see in Northern Virginia, which is Arlington, Falls Church, McLean, Fairfax, all of that, we're seeing prices on average still increasing. But some of the areas that are a little bit further out we are seeing that those prices have moderated and actually even decreased slightly, not significantly, but slightly. So I'm curious from your guys' perspective, and obviously you're in the market, what have you seen? Does this hold true from the areas that you guys service and have been working based on, what those numbers are looking at? And this, again, granted, this is from April, we're in June. So this data is outdated in some ways, because as we were just talking about interest rates changing, so are sales prices. The market can shift from one weekend to the next is what we find. So I guess from April till now, what would you guys say that you've seen relative to average sales prices in those different areas? I gotta have someone give me some feedback.
Well, Jolene, I know we've discussed this, but I can tell you that prices are going up does not surprise me in the slightest. My buyers are writing offers in Northern Virginia, and we're getting outbid, coming and going, no matter how hard we come.
Right. And then that's in the Northern Virginia. Nicole, have you been doing have you been making offers in Loudoun or Prince William, and are you seeing the same out there if you are?
I have not. I do a lot in Prince William, and I actually just don't have anybody out there right now.
Okay.
I did have one client looking in Stafford, and that one, it was just kind of a unicorn. Like, they hit it off with the seller and it wound up working. But it had nothing to do with the market as far as why that contract played out.
Okay.
But yeah.
Okay.
Northern Virginia.
Yeah.
It's brutal. There's no inventory.
Right. Thank you, Nicole. I appreciate that. Anyone else have any insight? We got 16 other people on here. I know you guys are doing business, so share with us and tell us what you've experienced or seen. Maya, what about you? Do you have anything that you can share with us?
The market's very weird. Literally, it's 1 week my offer's getting, I'm losing offers, and then the next week I'm actually getting my client closing cost assistance. So it's literally been weird, but I'm having more listings than anything else. I have like 5 listings coming up. And a few of my buyers, they're looking, but they're all saying the same thing. The interest rates are too high. And, we try to push them where it's just temporary refinance, in a year, whenever it goes down, but they're not very confident, as I could say. But like I said, it's different week to week. This is a really weird market the past, I want to say, like 2 months for me, from what I've been seeing.
Okay. All right. Well, good. I appreciate that. And I would say that I've experienced the same thing. Like you're saying, weekend to weekend can be different, and the agents that I work with and talk to frequently say the same thing. They just kind of never know when they're going to make that offer, what they need to do. Now, a few agents I talked to yesterday did indicate they felt like they were kind of feeling something like a slowdown, where it was kind of just feeling a little slower over the past few days. Now, again, Cindy said, there wasn't a lot of people that were getting on classes this week. So I don't know if it has to do with, I see a lot of high school graduations and things like that. If we're just kind of feeling like our area might just be busy on other ways. But we'll see, and are we going to go into the summer where we might see a little bit more of a slower market? which historically we have, but obviously this market has made no sense over the past, 8 months. So we don't know if that's going to prove to be, follow history. So, so it'll be interesting.
There's no inventory. And what I've been also seeing
Right.
is that the inventory that is there, how do I put it? The client, it's not updated. So you see a lot of houses that are coming to market that need work. And a lot of my clients don't want to put the work into it.
Yeah.
Because they're putting money into, their closing costs or their down payment. So putting that extra couple thousand, whether it needs to have new paint or new carpet, they just don't want to do it. So,
Right.
Inventory is definitely down. But whatever's out there,
Yeah.
we've seen a lot.
And in those situations, those houses aren't moving as quickly, right? That's what I've experienced or been told by, other agents.
They are and they're not. So I
Okay.
had one where the house, the interior of it, I was like, oh, maybe it'll sit. Maybe my client can get some closing cost assistance. The next thing you know, there's like 3 offers on it. And I'm like, oh, okay. So every scenario is literally different.
Okay.
It's really weird.
Yeah, I get it. I know. Okay. All right. Awesome. All right. Well, thank you, Maya. If anyone else wants to pipe in, I appreciate you allowing me to call on you and speak up. Maya, but if anyone else wants to share, would love to hear you. Oh, Lisa, I just saw your name. Yes. or your
Hi,
name.
I wanted to say, one reason I'm late is because I had a showing today, but it was with an investor. I'm noticing my investors are loving this market because the homes really aren't in good shape. It's easier for us to talk the price down to more of a price that the investors enjoy, and they'll sit on them, fix them, and then when the market change, they can sell them up to the better market rates.
And what area, when you were seeing like it was good for investors, is there particular areas that you're seeing that to be the case?
I noticed, well, I'm in Northern Virginia area, and here they're good. And I'm also noticing, even though I don't work the Pennsylvania market, I'm noticing those prices as well are good for investors. And they're in Maryland, I'm noticing there's a lot of those homes are very, they're priced low.
Yeah.
And there's a lot of, you can do the 203K loans as well in homes like those, but a lot of the buyers are not really able to see what the homes could look like with work in that. So it's easier to stick with the investors on those homes.
Yeah, the potential. Okay. All right. Well, thank you, Lisa. I appreciate that info. Okay. And this was, just to kind of give you an idea of the different organizations that track home pricing and kind of what's happening. And you can see CoreLogic, like April was what, 1.2, Black Knight up 0.5 in April. So we'll see as the rest of these come out and what's going to be, happening. But like we said, it's not a surprise in our market. We'll see as we get into these summer months, what that looks like. All right. So soft pull credit, this is kind of just some lending information. I've mentioned this before, but I would just say it's just become more and more prevalent for our clients. I think almost every client we have now that we do a pre-approval for, we are going to do a soft pull. It's very rare that we're going to do a hard inquiry on the credit because, one, it helps the client get into the door and put their foot in and start the process without feeling like, oh my gosh, I'm worried about hurting my credit. To be 100% honest with you too, almost I'd say the majority of mortgage companies are doing this because it's also cheaper for us. So because we have so many clients that are getting pre-approved and waiting or deciding not to move forward, that cost is incurred. So this way we're able to pull this at a much more reduced amount, but still get all the information we need. So I'm really glad our industry went in this direction because it helps us, like I said, kind of have a little bit easier, foot in the door to get the client moving forward with the pre-approval. So with us, we have the ability to do 3 scores, all 3 scores, and get all the liabilities that are associated with their debt. Or we can do 1 score and be able to run it through the automated underwriting systems, which is really awesome as well. So we have the ability to look at all 3 of them or just one, depending, or we can do both. And that's what I've done with many situations is I'll look at all 3 so I get what the middle score is. And then if the debt to income ratios are tight and I want to make sure it really does get approved through automated underwriting system, we can do just the 1 score and run it through and get that approval. So it's been really, really great for us that the market's moved in that direction, our industry. the AMI, which is the area median income. So there were changes made, and you guys probably all remember because all hit the social media where the rates were changing for, for different credit scores and things like that. And one of those was that if your area median income in our area, majority of our area, if your income was below 168,000, then you were going to be exempt from any of those changes that were bumping the interest rates potentially higher or lower, whatever it might be look like. And the reality, and what they just announced, Fannie and Freddie just announced, is that they're increasing that income, and it's going to be released this weekend. So we'll be able to find out on the 10th. I'm going to be putting it on a story for everyone, and then we'll do a video on it.
Wait, question, Jolene, is that for combined income or just one?
It's combined, but
Okay.
so many times, like I've been looking at clients where if we only need one income borrower to be on the loan to qualify and they meet that income restriction, we're going to take one borrower off. So
Okay.
we look at the situation to see what makes the best financial sense for them. So if they don't need the other borrower's income, we can take that off and not have to use it so that we can meet that income restriction. So the good news there is if you're a first-time home buyer and you make less than 168, you were exempt. Now that income is going to be increasing. So we'll be sending information out on that as it's announced. The other thing that they had talked about during those changes that they made to the interest rates was they were going to start to increase the rate potentially if you go over a 40% DTI, debt to income ratio. Fortunately, it was coming into effect in April. Then they announced that they were going to delay it until August. And then now they've announced it's not happening at all, which is really great because there's so many things that can happen during the loan process. Like their homeowner's insurance could come in higher than what we expected. They may have an HOA dues that we didn't know about when we started the contract. There's some out there that have two, a condo and a HOA. So many different things that can change that's not to the client's fault. And so we don't want them to be penalized for that. So fortunately, the lobbying proved to be effective and they have totally gotten rid of that. Reverse mortgage, we do have a reverse mortgage department. And I think that there's been some changes in that regard. I know my grandmother did one and it worked out really well for her. So if you guys have any clients that you think would potentially be a good fit, which means, they're basically able to take out a certain amount based on the value of their home and based on their age. They can take it out and then not make a payment. And then the interest is occurring as adding to the loan amount as they own the home. So obviously there's more details to it. We can always go over that. But if you have a client that you think that could be work for them, please reach out to us. There's also an Equity Express HELOC. So we have a lot of clients and the industry has clients where someone needs to get money really quickly, kind of like a bridge loan in a way. But it can be a first lien HELOC. It's something that can, be instantaneous, like within days. So it's something that we just kind of started to introduce. So if you guys have any questions, I'll be putting more information out about it, but just wanted to bring it up. So if it's someone that you're like, oh my gosh, somebody needs money real quick, or they have debt they need to pay off, but they have equity in their house, how can they get to it? Let us know and we can try to walk them through that. The Maryland Mortgage Program, that is something we've been doing a little bit more for clients as well. The MMP program, it's a great program, has, the ability to pay off student loans. We did that for a client last year, up to a certain amount. They'll pay off the student loans and it's forgiven, every a certain percentage every year, I think over a 5-year period. They also have a second trust that you can do 100% financing that also does that. So just something to keep in mind if you have any clients that are buying in Maryland that are first-time home buyers, that we can walk them through that program and how that works. Anyone have any questions on that? All right, and then from last month, I tell you what, I've done multiple videos on VA loans that you can have more than one, but it still comes up a lot. And I know not everyone sees my videos, so I'm just going to keep saying it every time I have the opportunity. I've had probably 4 clients this week that called me, and one in particular has a VA condo. He bought a condo using his VA eligibility. He's disabled with the VA, so he doesn't have to pay the funding fee. He called me and was going to buy a house with his mom and said, I know we're going to have to do an FHA or conventional loan because I can't do another VA loan because I already have this one. And I said, actually, that's not the case. So let's pull your certificate of eligibility, figure out what eligibility you've used already and how much you have left to be able to purchase another home. So we did that, and he was able to purchase another home for up to $600,000 without a down payment. If he went above $600,000, then he was going to have to put a small percentage down. And I think we looked at $650,000 sales price. If he purchased that, he'd have to put like $10,300 down. So it was like 1.6%, something like that, which is much less than if you were doing any other loan product for qualifying. Plus, he has no mortgage insurance. His funding fee is waived, and the rates are phenomenal on VA loans. So if you have a client that has a VA, has a property that has a VA loan on it, they want to keep it and potentially buy a new home, there is a strong possibility that they're going to be able to have it. Obviously, depends on what price range they're looking at for the new house and how much they have, used to purchase the current home. But many times, even if they, purchased a higher price home and want to purchase a higher price home, it's still going to be a smaller down payment than it's required if they're going any other loan product. So it's definitely always worth exploring. So that worked out really well for that client. And he's going to be able to buy that home and not have to worry about, down payment or very small. That's supposed to say spot, and instead it says stop. The spot, it's supposed to say spot FHA condo approval. So here's a story. So we had a client that came to us with a contract that was we had to do an FHA loan because of his credit score. We looked up the condo community that was listed on the contract, and it said it was FHA approved. So then we start going through the process, and we get the condo docs. The condo docs again said FHA approved. Then we get the title for the title work from the title company, and it shows a different condo association. So there's two within this one community. And unfortunately, neither the listing agent or the agent realized exactly what community it was, and they put the wrong one. So when we found out what the right one was, we were 4 days from closing. And the other community was not FHA approved. So we went through the process of getting that one unit in that community FHA approval. And we were able to do that and close one day late. We're actually 3 days from closing, and we closed 1 day late. So we got that FHA approval. By the time we got the form filled out, I think we got it back within 2 or 3 days. So we were able to turn that around very quickly. The client was still able to close and purchase that home. So again, if you have a client that has a property that they want to purchase and use a FHA loan, but the condo is not FHA approved, we have the ability to go through that spot approval. One of the caveats that they look at primarily is that there's not more than 15% of the units financed by FHA. So as long as they don't exceed that 15% investor concentration of FHA loans, then there's a very strong chance we'd be able to get it approved through the spot approval. So something to keep in mind. The other thing that came up for me is I'm doing a loan for a client out at Lake of the Woods. Now they're buying a second home out there. We were able to use our appraisal panel, and we actually were able to find a local appraisal out there, add them to our panel because they were approved through the management system that we use. And get the appraisal done by a local appraiser. So we're always working, no matter if it might be just a little bit out of our jurisdiction, to find appraisers that we can make sure know the market and are very well versed to make sure that appraisal comes in strong. So something to keep in mind, that we have a very strong appraisal panel, know the market very, very well. Border income, that has also come up several times for me recently. And border income, what that means is if I have a client that owns a house and they rent out 1 or 2 of the bedrooms, right? So they run out one bedroom for $500, they run out another bedroom for $700, and they want to use that income for qualifying. Unfortunately, that's what's called border income, and you have to have a 2-year history of it, and you have to have filed it on your tax returns. So it's challenging to use that income because most people are not going to claim it on their tax returns. I had a client that told me that their tax CPA said, you don't have to because it's not above a certain limit or something like that. So most CPAs are not going to always recommend that they have to claim it, which means it's great for their taxes, but not great when we're looking at trying to qualify them to purchase and you try to use that income. So if we have a client that's leaving their home and they're going to rent it, we're going to have one lease that shows, can have multiple people on the lease, but that it's just basically a flat fee. They're renting this out for, $3,000, and we're not having, multiple leases, individual leases, because unfortunately that's proven to be challenging. So something to keep in mind. The other thing that's great, I just learned, because you're always learning, is I have a client that has a VA property, right? And he's going to leave that property and go and buy another property. And we need rental income on that current property to help him qualify. VA actually does not require you to get an actual lease like conventional and FHA and most other loan products we have, where you have to have an executed lease, copy of the security deposit check. VA actually allows us to go online and find out what the income, standard income is for rental income for that area and that property. Pull it. I think there's a website, I can't remember the name of it, that we can use, and we can use that and not actually even have to have a lease in place. So super helpful, because I know a lot of clients can be leery and concerned, like, I don't know if I'll get a lease in time to be able to qualify. This is something that can help them when it's a VA loan. Retired. I've had multiple retired clients recently, and I've mentioned this before, but again, I was talking to an agent yesterday and she was telling me, I want to do a video with you to talk about this because she's getting near retirement age. And she said, I just have a lot of clients that ask me, like, how do I qualify? Can I still qualify even when I'm retired? And there are so many ways that we can create income for retired individuals. So if you have someone in that situation, please let them know and, share it, that there's still many possibilities of being able to get a retired client qualified to purchase a home. The other thing with my new company, which I'm really excited about, is we had a client that was in Hawaii buying a property here, and they weren't going to be here for closing. And we were able to do 100% electronic signing for closing. So they signed every single document. They got on video with a notary, and they were able to do it remote and sign everything electronically for the closing. And it was a VA loan. So where I was before, it was only a hybrid closing where you had like a handful of documents that still had to be signed in person. You couldn't do it on government loans, things like that. So now we have the potential to do it, I think, in almost every state. I think the only one that doesn't allow is DC. But so the areas around us. So if there's you have clients in that situation, we have the ability to do that. And it was cheaper than getting a remote signer, like a remote notary, that you had a notary go to them. It saved them money to be able to do this electronic signing as well, the fee wise. So good, information to know if you have a client in that situation. Anyone have any questions? I know I was talking really fast and gave a lot of information, but I hope that you found it useful. Has anyone had any of these situations come up? All right, well, you probably will if you haven't, because we all experience some crazy things each time. So if you haven't already, I'm sure you will. And now hopefully you'll remember this and know what you can do to solve it. So thank you guys so much. Have a great rest of the day. Here's all contact information. If you need anything, always reach out to us.
And remember, the replay will be on Jolene's instructor page. Okay.
Thank you, Jolene.
Thanks, everybody. Thanks, Jolene.
Okay. All right. Bye-bye.
Bye.